Morning. We'll begin with Accounting Standard 15, Employee Benefits. First, we should define what do you mean by employee, then we'll go for benefits. Maybe in income tax, you'd have learned about employer and employee relationship. To call it as which one? Salary income. Okay. There are two words that are used. One is called as contract of service. Second one is called as contract for service. What is the difference? What do you mean by contract of service? What do you mean by contract for service? Contract of service, okay, your services are contracted by me, which means you cannot do that work to anybody else without my permission. Morning 8 to 12, you are working with me for this particular work. Sir, during the time, can I do any other work? During the time, can I do any other work? Or after the time, can I do any other work? After 12 o'clock, can I do any other work? If employer permits, you can do the work. Otherwise, you cannot do the work. That is called as which one? Contract of service. For example, let's assume you are a chartered accountant working in full time with a company. Let's assume you are working with like Wipro or HCL like that. You are a full-time employee. Clear? Your services are contracted. Contract of service. Your working hours are from morning 9 a.m. to evening 5 p.m. 9 a.m. to evening 5 p.m. Okay. Before 9 a.m., can I take classes for CA? 6 to 8:30, can I take for CA? Then come to the office 9 o'clock to 5 o'clock, work as a chartered accountant, as a full-time employee. Saturdays and Sundays are all days, so can I take classes for CA? Leave done. Beyond the office hours, can I do that? No. That is what is called as what? Contract of service. Without the permission of employer, you are not allowed to do what? Any other work. You are not allowed to do any other work. Sir, can I file returns for my relatives, friends, etc. and all? No, not allowed. Okay. Why? Because 9 to 5 office hours are kept. Remaining hours are let free to take rest so that you come next day for the work fresh. Saturday, Sundays are given as a holiday to ensure that you are taking adequate rest and present to the office at Monday morning with a new energy for doing the work. If you are doing some other extra work on Saturday, Sunday also, and if you come to the office on Monday tired, then again it will get affected. Clear? So without the permission of employer, so Saturday, Sunday, then a holiday, then I can do any work. We can do any work other than monetary activity. Sir, can I do religious work? Allowed. Cultural work? Allowed. Socializing work? Allowed. Can I do monetary activity? No. Without the permission of employer, you cannot do anything. That is why contract of service, we call it as master and which one? Master and which one? Servant relationship. Otherwise, employer will decide the term of service or working conditions, etc. and all. Okay, you have to work within the conditions provided by the employer. Okay, let it be office hours or let it be doing the work or doing an extra work, etc. So all those things are more like a master and servant relationship. Without the approval from the master, the servant cannot do anything. That is what is called as which one? Employer-employee relationship. Okay, what is contract for service? It is professional services. Example of professional services: CA holding a certificate of practice, working as an external auditor. Okay, is he coming under contract of service, contract for service? Contract for service. For the person, it is going to be a professional income. And contract for service, now there is no employer-employee relationship. Okay, so simple. This accounting standard 15 covers only for the payment made under which one? Contract of service, master and servant relationship. Contract for service, professional services are not covered within this particular AS 15. For example, you are paying to a statutory auditor audit fees. Will it be covered under employee benefits? First, they are not employees. Our employee cannot become what? An auditor. Disqualification you could have seen. Clear? So employee cannot become which one? An external auditor. He cannot certify the financial statements. Clear? So that will come under which one? Professional services. Employer-employee relationship. So AS 15 is not covering that. It covers only what? Contract of service. This can be a full-time service or a part-time service. It can be a permanent service or a temporary service. All these things are covered. Let it be permanent employment, full-time employment, part-time employment. Everything is covered under which one? Employee benefits. Sir, even part-time employment? Yes. What about employees who are appointed on ad hoc basis, temporary basis? That is also covered under which one? The master and servant relationship. Employee benefits are applicable. Now, employee benefits can be short-term benefits. Example of short-term benefits. Example of, and again, this AS 15 also provides, the payment made as per the contract. What do you mean by payment made as per the contract? You are appointed for a salary with allowances, perquisites and all those things are coming under which one? Employee benefits. Here, as per the terms of agreement, the employer provides what? Basic salary, allowances. You could have seen different types of perquisites. All these things will come under which one? Contract of service, employee benefits. What about certain informal practices? What do you mean by informal practices? That is not there as per the appointment contract, but employer gives you certain benefits which are not mentioned in the contract, like ex gratia. You could have learnt it in income tax, ex gratia payment to workers. Nothing but surprise bonus is given. On festival occasion, some surprise cash cover or bonus is given to the employees. Or they celebrate the 10th anniversary of the company, 20th anniversary of the company. At that time, they give you what? A surprise benefits or bonus to the employees. Okay. Is it covered in employee benefits? Yes, that is also covered in what? Employee benefits. So, short-term benefits may be, for example, in the form of salary, allowances, which are monetary, and other which one? Perquisites. Okay. This also includes informal practices. What do you mean by informal practices? As per the term, it is not paid, but employer decides to pay on certain occasions. That is also covered under which one? Short-term benefits. It is also called as which one? Employee benefits. Please note this, then we will proceed. As per the accounting standard, it is accounted on accrual basis. It is accounted on what basis? Accrual basis. Once the benefits are due, ensure that you are accounting it. So let it be short-term benefits or long-term benefits. Both are accounted on what basis? Accrual basis. See, an employee is eligible for certain benefits which can be carried forward, and taken at any time. For example, leave encashment. You can get the leave encashment while in service. Every year you can get the leave encashment, earned leave. Yeah. Then otherwise you can carry forward and take it at the time of retirement also. At the time of which one? Retirement also. Let it be taken every year or let it be carried forward. Ensure that you are accounting on what basis? Accrual basis. Sir, how to do when an employee decides to take it on retirement? Every year you're eligible for, let us assume, earned leave of 1 month. You're not encashing every year. Employees decide to encash it at the time of retirement or after 4 or 5 years. Now what to do? Simple, create a provision. Create a provision. Certain leaves may be accumulating or non-accumulating. Don't bother about it. What do you mean by accumulating? Accumulating leaves, earned leave. One of the best examples is what? Earned leave. Okay. Maybe leave for leave travel. Okay, maybe leave travel concession you would have seen. For that, once in 4 years you can take. In a block of 4 years, an employee can avail the benefit for what? 2 times, like that you could have seen. Those things. Okay. Certain things cannot be carried forward. For example, maternity leave. It can be taken only during the maternity period. Can you carry forward it? No, you cannot carry forward. Yeah. So that is not available. What about medical leave? For example, in case of government services, they provide medical leave for 18 months. They provide medical leave for 18 months. When you can take that medical leave? At any time. At any time. Can you take it continuously for 18 months? Yes. Can you take it for 2 months, 3 months? In a break of like 1 year, second year, 10th year, like that? Whenever you want that medical leave, that can be taken. Okay. So medical leave, leave encashment are called as what? Accumulating leaves. Accumulating leaves. Okay. Then certain leaves cannot be carried forward. Like, for example, maternity benefit leaves or certain yearly benefits that cannot be carried forward. Whatever it is, let it be accumulating or non-accumulating, it should be recorded on what basis? Accrual basis. All types of employee benefits, short-term or long-term, we have to recognize on what basis? Accrual basis. Post-retirement benefits, the employee will get it. Employee will get it on retirement or after retirement. Okay. There are two types of plans. One is called as a defined contribution plan. Another one is called as a defined benefit plans. I'll explain this. And this accounting standard mainly deals with these two plans. We have to learn this separately. Defined contribution plans and which one? Defined benefit plans. Others. This we will learn it separate. Okay, separator we have to discuss and learn. Do you understand? All short-term benefits are recorded on what basis? Accrual basis. All long-term benefits, it can be accumulating or which one? Non-accumulating. Okay. Everything will be recorded on what basis? Accrual basis. Clear? Shall we? What are the two types of post-retirement plans? One is called as which one? Defined contribution plan. Second is defined benefit plans. Do you understand? It covers only which one? Contract of service. It can be a full-time service, part-time service, temporary workers, permanent workers, all those things. It does not cover which one? Contract for service. Okay. For example, listen. What about the faculty of Bharadwaj Institute? Let it be DJ sir or Vatsan sir or Shokumar sir. What about faculty services? Will it come under contract of service or will it come under contract for service? It is coming under what? Contract for service. There is no employer-employee relationship. They are called as professional payments. Professional payments, that will not be called as what? Employees cost. What about salary of admin staff? Contract of service. So that will come under what? Employee benefits. That will come under which one? Employee benefits. What about salary paid to directors? Of service or for service? Of service, I cannot be a director of another company in North. Without the permission of the company, I cannot become director of another company in North. I am paid, let us assume, sitting fees for board meetings. I am paid certain fees for administrative works. That will be coming under which one? Contract for service only. That will come under which one? Contract for service only. Okay. Only when I render full-time service, full-time director, okay, full-time director service, then only it will be coming under which one? Contract of service. You can call it as what? Employee benefits. Employee benefits. Okay. Now, let us come to this post-retirement benefits. There are two things. One is called as which one? DCP, na defined contribution plan. What is a defined contribution plan? Simple. Employee and employer contributes a percentage of salary to a plan. On retirement, the benefits are paid. On retirement, the benefits are paid. Okay. What do you mean by plan? The defined contribution plan is nothing but the plan. Okay. What do you mean by the defined contribution plan? The plan may be run by the state. State means government. The plan can be run by employer. The plan can be run by multi-employer. Can you give me an example? You contribute money to a plan run by the government, or employer himself can create a separate defined contribution plan and run it, or 2 or 3 employees joining together and run that plan. Simple. SPF. Statutory Provident Fund. Who maintains Statutory Provident Fund? Government. The contribution goes to government. Which money goes to government? Employees a percentage of salary, employers a percentage of salary. That goes to the PF. Okay. On retirement from Statutory Provident Fund, employees get it. Maybe you could have seen this. A recognized Provident Fund, unrecognized Provident Fund. Okay. Where the employer maintains a Provident Fund and the contribution of the employer and employee goes to that fund. Okay. It can be run by multi-employers. This can be run by others also. It can be run by multi-employers, or it can be run by what? Others. Okay, which can be insurance benefits. For example, employee will contribute like or 10% of salary. Employer will contribute what? 10% of salary. 20% of salary will go to what? The insurance contribution. They will take an insurance policy and keep on paying the premium. On retirement, you get back from the insurance company. You get back from the insurance company. This also includes like national pension schemes. Clear? You are paid during the service, the money is contributed towards NPS. Then on retirement, you get either lump sum payment or monthly payment. That is up to you. The employee can decide, and of course you can get it. So this is called as which one? Defined contribution plan. Simple. Employer's contribution is the cost to the company. That is the employee benefit. Clear? Whatever employer contributes becomes what? Expense for the company. What about employee's contribution? That is his contribution. From the salary, it is deducted and paid. That is not my cost. What is my cost? Whatever I pay from my pocket. Clear? So whatever is the employer contribution is called as which one? Cost to the company. It is recognized on accrual basis. For example, you are all working in a company. Add up all the salary into 10% contributed becomes what? Expense for the employer. So recognize it on what basis? Accrual basis. Wait. On retirement, whether any extra money will be paid towards this from the employer's pocket. For example, an employee is retiring. Okay. PF contributions are returned along with interest. Okay. Let it be RPF, URPF or SPF or insurance or national pension scheme. At the time, towards this, whether employee will pay any 1 rupee from his pocket? No. Year to year, the contribution is defined. That's the defined contribution plan. What do you mean by defined contribution plan? As per the terms of appointment or as per law, the contributions are what? Well defined. Contribute pannunga over. Okay, employee also will contribute. On retirement, the employee will get from that particular fund. So whatever is the employer contribution, that is a cost to the company, that will be recognized on what basis? Accrual basis. This is defined contribution plan. What is the next one? Okay. So defined contribution plan. What is the next one? Defined benefit plan. Listen to it. Apparama copy pannikala. Defined benefit plan. Okay. The benefit depends on certain factors. Benefit is known, but amount cannot be quantified today. PF, your salary into 12%, amount can be quantified. Insurance compensation or contribution, salary into 10%, that amount can be calculated. Okay. National pension scheme, salary, basic plus DA farming part pay into what? 10%, 12%, that can be estimated, quantified. But defined benefit plan, benefit is defined. But the amount of benefit depends on certain contingent factors, such as number of years of service. Anything come to your mind? Salary at the time of retirement. Okay, simple. Best example is gratuity. For example, he is joining the service today. After 30 years, he is going to retire. Okay, at the time, what will be the gratuity that he'll be getting? Can you estimate it today? No. Benefit is there. What is the benefit? Gratuity. But how much amount? That cannot be quantified. That cannot be quantified. And it also depends on minimum years of service. For example, when you are eligible for gratuity, you are joining a company. When you are eligible for gratuity, minimum 5 years of service. After that, only eligibility only will come. For example, she is in the first year of service, he is in the second year of service, he is in the third year of service, he is in the fourth year of service, the other person is in the fifth, sixth year of service. Now, will she continue the company for 5 years? Is it possible to tell today? No. A person putting in third year service, will he continue service for 5 years? No. But once the person completes fifth year, he is eligible. But we have to create provision for all. How it is possible to create? Do you understand the difference? Defined contribution plan, simple. Employer contributes, employee contributes. Whatever is the contribution, that becomes an expense. That becomes an expense. Defined benefit plan, you cannot work out amount directly. Salary into this percentage, you cannot work out because amount depends on certain contingent factors. Okay, so best example is which one? Gratuity. So what to do? For defined contribution plan, we require actuarial valuation. We require which one? Actuarial valuation. Sir, what do you mean by actuarial valuation? Actuary is a person. Maybe you could have seen actuarial science course on the money. Actuarial science, BSc actuarial science or PhD in actuarial science. Okay. Actuary is a person who will value the liability or obligations based on the life expectancy of the human resources. How many years a human resource will work for a company? How many years a human resource will live in the country or live in there? On the base party liability will determine. Okay, actuarial valuation itself is a big or different one. For a company, actuarial valuation means how many years this employee will serve my company. Okay, how the actuary will work out. I can tell it in 1 minute, but it is actually a 10 years course, actuarial science. Okay, so how they will evaluate? Simple. They will count labor turnover in the industry. They will look into the inflation rates in the country. They will look into the, for example, labor shifting from one company to another company. How many shifts takes place? How frequently the shifts takes place? And number 4, how many years the employee can work efficiently in a company? Certain people you can find they will join at 20, work with the same efficiency at 65 also. Certain companies or certain nature of work will be like 20 years you join, 30 years later, all parts would have been damaged. Okay, it's like 35 you search for a job, you won't get a job. At 40 you are already retired because you are maybe used like anything like a machine. Okay, so I'm leaving out all these things. Coming to actuarial valuation. Actuary will value the liability based on so many parameters. What is the nature of the company, nature of the business, nature of employment, labor turnover in industry, salary growth rate in the industry, how the company is paying the increments, how the industry is paying the increments, whether the employees will stay or not, what is the probability of employees continuing the service for the minimum 5 years period, beyond 5 years period. Some people will wait for the 5th year. Once 5th year is over, I'm eligible for gratuity, let me get the gratuity and shift to another company like that. So if you look at an employee leaving the company in 1st year is possible, 2nd year is possible, 3rd, 4th, 5th year nobody will leave because 5th yearly you will get what? A lump sum gratuity that will be equal to 1 year salary. Nobody would like to lose that. Okay, so I mean actuary is a person who will work liability based on what? All these parameters. Will it be same for all the company? Company to company it will be different. Company to company it will be different. Company to company it will be different. For a software company, development versus maintenance. Okay, for a banking sector, for a manufacturing sector, like that. Every company will have its own what? Expectation of life of the human resources in the company, salary increment, labor turnover and all. So we have to give the employees list to actuary and he will tell the estimated liability towards gratuity. He will tell the estimated liability towards which one? Gratuity. Actuarial valuation is not only for this. Actuarial valuation is there for life insurance policies. Maybe if you ask for, maybe if you meet a life insurance agent, first they will tell you how and all you will die. By attending advanced accounts class, you will die. Then they will tell you better to take a policy. Then they will ask your age. Okay, you are telling the age, which policy you want. They will take a big logbook, page number 424, table number 2A, age 30, premium per person. Male na 1000 rupees, female na 1100 rupees, and the mari work out pani solluvaanga. Okay, because risk and returns are different, so they will work out. So who prepares this table? Actuary is a person who will prepare the table and give it to what? Life insurance company. Based on that, the premiums are determined. So that is a big science, actuarial science in solluvaanga. That's a big course. But coming to our accounting part of it, examination part of it, if it is defined contribution plan, what to do, sir? Simple. A percentage would have been contributed. Take it as an expense. Take it as an expense. If it is a defined benefit plan, what to do, sir? They would have given actuarial valuation. You are not there to do actuarial valuation. Actuarial valuation of liabilities and assets will be given. You have to just account it. You have to just account it. Clear? So this should also be recognized on accrual basis, which means every year actuarial valuation should be done. Every year actuarial valuation should be done. Is it mandatory? Yes, mandatory. If Payment of Gratuity Act is applicable, we have to give the list of employees to the actuary. Okay, they will do the tax valuation and then do what? They will estimate the liability year to year and tell you. Last year to current year, whether the same liability will come. Things would have changed. What would have changed? Earth as a whole, it would have changed. Okay, economy would have changed. Inflation would have changed. Clear, labor turnover would have changed. Number of workers working in the company would have changed. Our business would have changed. The business either will be having a better connivance or you may close down அந்த மாதிரி இருக்கலாம். Going concern may get affected. Okay, the earnings of the company may get affected. The power of trade union versus power of employees might change because of change in laws. So every year you have to do which one? Actuarial valuation, and recognize the expenses on what basis? Accrual basis. It's not like once in 3 years, once year, 4 years valuation. Every year actuarial valuation should be done. Okay, take up this. So defined contribution plan or defined benefit plan. Okay, it is coming under which one? Retirement plans. Long term, of course, retirement plan. Post retirement, the employee will get it. Let me to continue with defined which plan? Benefit plan. There is nothing to discuss under defined contribution plan. Every year, whatever you contribute is an expense. Defined benefit plan, we require which one? Actuarial valuation. Actuary will value plan assets. Example, gratuity fund investment. He will measure plan liabilities. For example, gratuity fund. Okay. Plan assets are nothing but for paying that money, what investment you create. Plan liabilities are nothing but obligations payable. Obligations payable. Fair value of plan assets at the beginning of the year. Add which one? Current year gratuity contribution of employer. That will be invested. That will be invested. You cannot use that money for your company's purpose. Once gratuity is created, can I take that and buy stock? No. So fair value of assets means investments at the beginning of the year. Employer contribution during the current year will be what? Invested in that fund. Less benefits paid. Why are you reducing benefits paid from plan assets? Whenever you are paying gratuity, will you pay it from your company's funds or out of the gratuity investment that you are maintaining? We'll sell the investments and pay the gratuity. We'll sell the investments and pay what? Gratuity. Simple. Wherever there's a contribution, you cannot take it to your bank current account. Keep it in a separate investment called as what? Gratuity fund investment. Whenever you are paying benefit, the company will not pay it out of the pocket. They will sell the investments and what? They will pay it. Then, when you maintain assets, there will be return. Add return on plan assets. When we make investments, let it be government security or let it be anything, we'll get which one? Return on plan assets. It will give us fair value of assets at the end of the year. This will be taken for balance sheet. This will be taken for which one? Balance sheet. So, who decides this employer contribution? Actuary. Clear? How much to be contributed for gratuity fund? Year to year, who will decide? Actuary will decide. Take up this. This is about plan assets. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Fair value of liabilities, nothing but gratuity obligations estimated at the beginning of the year. Current service cost means for the current year employees work, for that additional obligations will come. Or till last year, about 100 employees completed 4th year of service. This year, those employees completed what? 5th year of service. Now, extra obligation will come. That is called as which one? Current service cost. Interest cost is to provide for inflation. When benefits are paid, your obligation reduces. It will give us fair value of planned liabilities at what? End of the year. Now, whether actuary is, God to determine exact liability and asset. Actuary does estimates. Can the estimates be accurate? No, there will be a difference. So, difference between expected return and actual return shall be taken as actuarial gain or loss. And recognized in P&L account. Return on plan assets. Expected return versus actual return will be recognized as what? Expense or income in the P&L account. We'll see how to recognize them. Shall we? Shall we? Just to have a run through. Short-term benefits are recognized on what basis? Accrual basis. Long-term benefits also recognized on what basis? Accrual basis. If it is defined contribution plan, whatever is the employer contribution, that is a cost to the company, it is recognized on what basis? Accrual basis. Defined benefit plans require which one? Actuarial valuation. Let it be the contribution, okay, or let it be the current service cost. All these things are estimated by what? Actuary, and that is recognized in P&L account. Suppose if there is a difference between actual return and expected return, that is also recognized in which account? P&L account. Okay. Now we'll go to the material. We'll not do in the same order. Look at question number 8. Look at question number 8. Fair value of the plan assets at the beginning of the year, 2,800. End of the year is how much? 3,086. Employer contribution during the year is 290. Benefit payments are how much? 320. They ask you to find out which one? Return on plan assets. Return on plan assets. For me, it is copy and paste now. What is the fair value of assets at the beginning of the year? 2,000? Okay, what is the employer contribution? 3,086. What is the benefits payment made? Employer contribution how much? 2. Benefits paid? 3. Return on plan assets is not given. They ask you to find out. What is the fair value of plan assets at the end of the year? 3,086. So 2,800 plus 290 minus 320 போடுங்க. இது வரைக்கும் எவ்வளவு வருதுன்னு பாருங்க. What is the answer? Up to this, you adjusted to what is the answer? 2,000? 2,770. Closing balance is 3,086 now. The balancing for is which one? Return on plan assets. So 3,086 minus 2,770. That is called as which one? Return on plan assets. This is for which question? Question number 8. Wait. I'll give you time to copy. Pay attention. Question number 8. Read question number 9. Fair market value of plan assets at the beginning is given. At the end of the year is given. Employer paid na, benefits paid na. That is employer paid na, contributions paid. Benefits paid to the employees are given. Adhe format la fill up pannikala. This is a next year question. Question number 9. What is opening value of plan assets? Okay. What is the employer contribution? Employer paid. How much benefits paid? How much?
1 lakh.
1 lakh. What is the closing value? 5,70,000. Here also as a balancing for, we can find which one? Or written on plan assets as a balancing. How much you get? 1 lakh? 1,30,000, a balancing for that. Question number 10. The columnar format la mudichilla. All these are past exam question only. Question number 10. What is the fair value of assets at the beginning of the year? What is the employer contribution? 1 lakh? What is the benefits paid? 1 lakh. So what is the plan at the end of the year? Balancing for launching. Balance 1 lakh.
1,70,000.
This is question number 10. Read question number. They ask you to find out fair value of plan assets at the end of the year. Okay. Question number 11. What is the fair value of plan assets at the beginning of the year? What is the employer contribution? 1 lakh. What is the benefits paid? What is the return on plan assets? Reporting now, you will get which one? Fair value of plan assets at the end of the year. All these are past asked questions. Next. Okay. Question number 12, we cannot do directly like this. There is some extra thing we have to do. I'll come to that later. Copy this as well. So from this plan assets, plan liabilities, questions are repeated. Defined which plan? Benefit plan or contribution plan? Benefit plan. If it is for 3 marks, 2 marks, they will ask this. If it is for 4 marks, 5 marks, that will be question number 12. Okay. So hotspot put connect.
Net problem.
Problem இருந்துச்சுன்னா இது கொடுத்துட்றோம் மடி இல்லை இது சார்ஜர் கொண்டு நான் மத்தியானம் போகும்போது எடுத்துக்கிறேன் அனுஜா எடுத்து சொல்லிடுறேன். Question number 12 பாருங்க. Read question number 12. Is it over? Up to question number 11 you have taken? Done. Go to question number 12. On 1st April, the fair value of the plan asset was how much? 1 lakh. Okay. How much paid? 19,000. Contribution? 49,000. Fair value of the plan assets at the end of the year is given 1,50,000 கொடுத்திருக்காங்க. Obligations பார்க்க வேணாம். Actuarial losses we will come to that later. We are yet to see about obligations. As of now, we are discussing only about what? Assets, we will come to that later. The following estimates are made. When you make investment, income will be 9.25%. Realized and unrealized gains 2%. Administrative cost, now somebody has to manage the fund, gratuity fund, and make the investments, etc. That is coming to 1%. Expected rate of return is 12.5%, which means what is irrelevant? These are all irrelevant for solving the question. What is relevant is, what is the expected rate of return? 10.25%. The question is, expected return and actual return on which assets? Plan assets. Do they talk anything about plan liability? Do they talk anything about plan liability? No. So the present value of obligation, actuarial losses of the obligation is relevant for solving the question or irrelevant? Irrelevant. The question talks only about which one? Plan assets. And we are not bothered about how much you are getting, 9.25% or 2% or 1%. Now, what is the net expected return? 10.25%. It is like investments are made. From that, we can expect after all charges 10.25%. Shall we? First, let us work out the actual return. What is the fair value of assets at the beginning of the year given in the question? What is employer contributions received? What is the benefits paid? What is the fair value at the end of the year? 1,50,000. It's a balancing for as usual. How much? 20,000 is which return? Actual return. Expected return, wait pannunga. What is the fair value of assets you are holding at the beginning of the year? 1 lakh. Expected return net எவ்வளவு percentage கொடுத்திருக்காங்க? 10.25% per annum. Per annum மாதிரி தான். On the opening balance. Opening balance 1 lakh into 10.25%. One lakh into 10.25% net realized gain. எவ்வளவு வருங்க? 10.25% தான். 10,250. On the net additions during the year. What do you mean net additions? How much of contributions made to the fund? 49,000. How much of benefits are paid? 19,000. This investment sale பண்ணி benefit pay பண்ணிருக்கு. So what is the net additions? 30,000 into 10.25% into 6 by 12. இதுதான் ரொம்ப important. Why 6 by 12? Additions happen at the beginning of the year, end of the year, or throughout the year? Additions happen throughout the year. Additions happen throughout the year. So on an average basis, provide 6 months. So how much it will be? So this is the expected return. This is the expected return. What is the expected return? 11,788. Your actual returns are more than expected return. What is the actual return on plan assets? Work out pannu. 20,000. Expected return 11,788. Is it a gain or loss? It is called as actuarial gain to be credited to which account? P&L account. To be credited to P&L account. That is what I told you as actuarial gain or loss. Expected return and actual return may not match and will not match. Expected return is less, otherwise actual returns are more than expected returns. It will be taken as what? Actuarial gain or loss. So difference between expected return and which one? Actual return shall be taken as what? Actuarial gain or loss and recognized in which account? P&L account. Doubt irukka? Opening balance 1 lakh into 10.25%. On net additions 30,000 into 10.25% போடக்கூடாது because contributions do not happen at the beginning or at the end. It happens throughout the year. So on an average basis 6 months எடுத்துக்கணும். So 11,788. Okay, difference between actual return and expected return is called as which one? Actuarial gain or loss. This actuarial gain here, it will be recognized in P&L account. We have not spoken anything about planned liability. Suppose if they ask you a question, what is a planned liability given? What is a planned liability given? It is not asked, but we'll still. What is a planned liability specified? 1,47,920. It will be recognized under non-current liabilities in balance sheet. In the balance sheet. Adula actuarial enna irukkunga? Loss. Actuarial loss on the obligation. Evlo irukkunga? Rupees 600 to be recognized or to be debited to which account? Profit and loss account. This is not asked, no need to answer, but suppose if they ask you to discuss on planned liabilities also, then you have to do this answer. So far we were doing only this actual return. Here, since percentage is given, we work out which one? Expected return also. Difference is called as which one? Actuarial gain or loss. This actuarial valuation will keep on changing. One year it may increase, another year it may come down. For example, sometimes you will retrench the employees, or company may be running in a loss, you may close a division, or you may close a branch. Okay, at the time, number of employees may reduce, or suddenly the employees will shift as a group, they will shift to another company. That time your obligations will reduce also. It is not that always obligations will increase or assets will increase. Sometimes there may be a curtailment. Curtailments means stopping the operation, or reducing the workforce, or selling off the factory. That time your obligations may reduce. Any doubt in it?
Actually, gain which we get that will be classified as income from investments. That is
Other incomes, other incomes, other incomes, other incomes. It is connected to employees. Employees' benefits are operating expenses. So it will be classified as what? Other income under cash from operating activity. This is related to operating activity then. This is not your investment. It is not your regular investment in shares, debentures and all. It is to do with which one? Planned liabilities and what? Planned assets belonging to employees. See, the employees owed assets, employees owed liabilities. Or towards employees, these assets are created and liabilities are created. It is part of your operating activity. Otherwise, employee benefits are which one? Operating activity. And again, here the cash flow would not have come. The cash flow would not have come. It is only an actuarial gain or loss.
It's not actual cash.
Wait 1 minute. In the same model, I have given question number 13. In the same model, I have given question number 13. Only numbers change, but concept is the same. Try பண்ணுங்க. So if this question is asked, it will be like 5 marks. It is worth for 5 marks. But you have to write the AS. Okay. What is the AS you will write, or what content you will write before starting this? As per AS 15, it is a defined benefit plan. Actuarial valuation is required. The gain or loss in actuarial valuation is recognized in which account? P&L account. So I work out and give the answer like that. You have to write. So in this question, in the exam, you need not discuss about which one? Plan liabilities. It is just for your thing. Suppose if they ask you to give notes on plan liabilities, then you have to give the answer. Question number 12, copy பண்ணிட்டீங்களா? Done. Question number 12. Read question number 13 next. Question number 13 next. A similar sum only. What is the fair value of assets at the beginning of the year? Contributions made. What is the benefits paid? What is the closing balance? 80,000? So what is the balance? The 15,000, I think. Opening balance 15,000. 15,000. What is the balance? 1,500. Expected return after all the net. What is the net expected return? 10%. So on the opening balance, 15,000 into 10%. 1,500 rupees. On the additions, what is additions? 4,000 minus 2,000. On the additions, எவ்வளோ percentage வருது? 2,000 into 10% for 6 months. How much it will be? 100. Your expected return is more than which one? Actual return on plan assets. Otherwise, we got lesser return. It will be an actuarial loss that will be debited to which account? P&L. Take up this. Read illustration number 14. That is also one of the most repeated problem in the exam. That is tested for 3 marks. But problem பார்த்தா ரொம்ப பெருசா இருக்கும். It's very big. But the solution will be just 3 lines. So if you look at your advanced accounting paper, MCQ 30 marks இருக்கும். அதுக்கப்புறம் டிஸ்கிரிப்டிவ் கொஸ்டின்ஸ் இருக்கும். ஏதோ கதை புக் கொடுத்த மாதிரி ஒரு ஃபீல் பண்ணுவீங்க. ஓகே, ஒரு பெரிய புக்லெட் ஒரு 40 பேஜஸ் 45 பேஜஸ் கொடுக்குங்க, அதை படிச்சு முடிக்கவே 3 மணி நேரம் ஆக மாட்டிருக்கு அப்படின்னு. பட் ஆல்வேஸ் when a paper is lengthy, the solution will be very very small. Best example is the next question. Read the story, question number 14. Understand it, then we'll solve. Curtailment means stopping the operation or closing down a facility. Curtailment means you are going to close down a facility. Since you are closing down a facility, obligation is reducing. Obligation is reducing. They have given something like fair value of plan assets. What is the fair value of plan assets? How much is 5,000? And there is no change. No change. Now we are not selling any asset in this. Before curtailment, what is the gross obligation given? 6,000. Unamortized cost, na cost yet to be charged in P&L account. What is the cost yet to be charged in P&L account? 180. It is reduced by euro percentage? 10%. 6,000 let 10% is 600. On the 180 let 10% will be 18. So after curtailment, obligation is how much? 5,100. It is going to be 180 minus 18, 162. Remember simple. Obligation reduced by how much? 600. Is it a gain or loss? When obligation reduces by 10%. Yeah, it's a gain or loss? Gain. Less adoda proportionate unamortized cost. எவ்வளவு இருக்குங்க? 18. So net benefit from curtailment எவ்வளவு இருக்குங்க? 582. That is credited to P&L account. That's it. Answer is over. There is a fair value of plan assets given. There is no change in that. Obligations before curtailing, before stopping the operation is 6,000. Adoda proportionate unamortized cost was how much? 180. Obligation reduces by 10%. Unamortized cost proportionate 18. After curtailment, obligations will continue at 5,100 and unamortized cost will be what? 162. So reduction in obligation is a gain. Adjust the unamortized cost. Net benefit from curtailment will be credited to which account? P&L account. எல்லாமே கொடுத்திருப்பாங்க. 10% of 180 is 18. 6,000 let 10% is what? 600. Okay. Fair value of plan assets, there is no change. Unamortized past service cost is like 180. And the 180 into 10% then the 18. That's it. Oh. In the same model, I have given question number 15. Both are repeated in the past examination. Only numbers are changed.
Sir,
Yes, please.
sir, there
Liability after curtailment is 5,100. Obligation means liability.
Okay.
That is for question number 15. There is no change in the fair value of plan assets. Maybe you can do that at the end also. This 1,900 will be recognized in balance sheet. This will also. Obligation reduced or it's a gain. Proportionate cost adjusted balance you credit to which account? P&L account. There is no change in the fair value of which one? Plan assets. We are not selling any assets. Plan assets la edhum sale pannu. 1,800, okay. Value 5,000, okay. There is no change in the fair value of plan assets. We have started with which question? Question number 8, 9, 8 ல இருந்து 15 வரைக்கும் முடிச்சிருக்கோம். So let it be vesting benefit, accumulating benefit or non-accumulating benefit that should be recognized on accrual basis. We had seen. Okay. Certain non-accumulating benefits like I told you maternity leave or leave encashment for certain specific purposes. Okay. Or medical leave, medical reimbursements recognize only when the actual things happen. Question number 16, we'll come to that later. Question number 16, we'll come to that later. We'll go to question number 1. We'll practice some questions from your ICA material. All these things, wherever the word illustration is used, it is taken from your ICA material. Now, what kind of employees benefits are covered in what? AS 15. whether formal employer-employee relationship is necessary or not for benefits to be covered under which one? This standard னு கேட்டிருக்காங்க. Okay. See, let it be formal employer-employee relationship, let it be temporary work or permanent work, whether it's a contract or not, all are covered under which one? Employee benefits, including which one? Including informal practices. Including informal practices. No need to take up notes. It is taken from your ICAI material. You should go through that also. It is illustration 1 from your material. Okay. There is no definition for employee. Okay. Wherever there is a contract of service, it is coming under which one? Employee benefits. Contract for services refers to which one? Professional services. Professional services. So it covers everything. Everything comes under which one? That's what? All forms of employer-employee relationship. Clear, let it be formal or informal, part-time, full-time, everything is covered. Wherever there is a which one? Contract of service, it is covered under which one? Employer-employee relationship. Clear, contract for services are not covered. That is answer for which one? This one. So you can just note these things are from ICAI material. Refer ICAI material note panning. No need to take up the notes. You can directly read from ICAI material. All these are theoretical questions. What is the next one? Where an employee is required to provide for employee benefits arising from which one? Informal practices. Yes, informal practices are also covered. What do you mean by informal practices? And the surprise bonuses given, surprise benefits given, special things given. It all depends on, listen, it all depends on, okay, how frequently that thing is given. Is it given to one employee or all employees? Is there a criteria? For example, only to one particular employee, certain surprise bonus will be given. That will not be covered under what? Informal practices. For all the employees, on some rational basis, the benefits are given. That will be covered under which one? Employee benefits. So you can look at the answer given over there. Whether the employees are required to provide employee benefits. Okay. The paragraph alone you need not remember. Okay. Very difficult to remember all these things. Okay. Employee benefits include those informal practices also. Okay. Informal practice gives right to benefit of, employee benefits under this particular standard. Employer is having a practice of a lump sum payment on the occasion of festival regularly and grants advances against informal benefits to the employees. Now, it is necessary to provide such benefits in the mari kuduthirukanga. Clear? So that will be covered under which one? Employee benefits. Whether informal practices are also covered under employee benefits? Answer is what? Yes. Next forum. Illustration number 3. Read this question fully. We can solve it in the notebook. Or in the material itself, we can write the answer. How much is required to pay? 2 crore. This is called as accrual. But paid a salary of only 1.9 crore. Okay. Balance 0.1 crore is outstanding. So they ask you how much will be charged in P&L account and how much will be shown in the balance sheet. Simple. 2 crore will be recognized as an expense on what basis? Accrual basis. Unpaid amount will be shown as what? Outstanding expense in the balance sheet. Clear? How much of total expense we need to recognize? How much of total expense we need to recognize? 2 crore. Okay, that is the P&L account thing. Balance sheet unpaid amount, how much will be recognized? 10 lakhs will be recognized in the balance sheet. 10 lakhs will be recognized in the balance sheet. It's a one-liner question or MCQ on the Mari. Question number 4. Whether entitlement of earned leave, which can be carried forward for the future period, is a short-term employee benefit or a long-term employee benefit. earned leave, encashment, you can avail it or you can carry forward. Okay, that it is at the employee's option. It is at which one? Employee's option. From the company's perspective, if employees ketala, you have to give the leave encashment. So it will be taken as which one? Short-term benefit only. It's a short-term benefit only. For example, for unavailed leave, you are eligible to get the cash. For unavailed leave, you are eligible to get the cash. Can you get it if you want? Every year you can get it. Every year you can get it, or you can get it at the time of which one? Retirement. Okay, if you get it at the time of retirement, it comes as retirement benefits. Every year, leave salary availed while in service. Maybe income tax la paathirpeenga. If leave encashment is done while in service, it is fully taxable. Only when it is received at the time of retirement, some on the 1/3, 1/2, with gratuity, without gratuity la paathirpeenga. Okay. So that is for tax purpose. Accounting purpose, leave encashment is it a short-term benefit or long-term benefit? Short-term benefit. For this year, okay, for leave not taken, benefit is given to you. It is which one? Short-term benefit. Simple. If the employee wants to accumulate it, it will be an accumulating benefit. If the employee wants to get the cash immediately, it will be called as what? Non-accumulating. Let it be accumulating or non-accumulating. It will be recognized on what basis? Accrual basis. Okay, start. Other than termination benefits, we call it as which one? Short-term benefit, which is fallen due within what? 12 months after the end of the period. Okay, so that is what is called as which one? Short-term benefit. So compensated absences, that is nothing but earned leave. Compensated absences is nothing but which one? Earned leave. That will come under which one? Short-term benefits. That will come under which one? Short-term benefit. Clear? All those things are coming under which one? Short-term benefits. Employee can opt to get it later or immediately. But as far as the company is concerned, for the last year, that is accrued. It is accrued. Please note, just note, it is a short-term employee benefit. It is a short-term employee benefit. Let it be accumulating or non-accumulating, it is a short-term benefit. In case an enterprise allows unutilized employee benefits like medical care, leave, travel, etc., and all to be carried forward, whether you have to recognize a provision for the carry forward benefit. Okay, we had seen accumulating benefits, non-accumulating benefits. What do you mean by accumulating benefits? Carried forward and the benefit is taken in the next subsequent year. Non-accumulating, when they arise, you take it. Okay, you cannot carry forward. Let it be accumulating benefits or non-accumulating benefits. It should be recognized on what basis? Accrual basis. So therefore, a provision is required. A provision is required. Non-accumulating, it will be paid immediately. No provision required. If it is accumulating, okay, the accumulated amounts will be called as which one? Provision. Start. Illustration 5, shorted thing. It is called as which one? Accumulating benefits. A provision has to be created on accrual basis. A provision has to be created on accrual basis. A provision has to be created on what basis? Accrual basis. Read illustration 6. Read full illustration 6, understand it, then we will solve it. Omega Limited belongs to engineering industry. The company received actuarial valuation. So wherever there is an actuarial valuation, it will be coming under which plan? Defined contribution plan or benefit plan? Defined benefit plan. There is a surplus of how much? 6 lakhs. Now actuarial gain. Actuarial gain. Okay. By reducing the annual contribution to 2 lakhs instead of how much? 5 lakhs. Okay. Average life of the estimated employees are going to be 6 years. Request to advise the company on following items with the find. ரொம்ப simple. They ask you how the surplus should be accounted. Simple. As per AS 15, actuarial gains and losses are to be recognized in P&L account immediately. Here, what is actuarial gain? 6 lakhs. Recognize or credit to P&L account. Just note. As per AS 15, as per AS 15, actuarial gains or losses are to be recognized immediately in the financial statement. Actuarial gains or losses should be recognized immediately in the financial statements. Shall we? So 6 lakhs should be credited to P&L account. Right? One more thing, 6 lakhs should be credited to which account? P&L account. Actuarial gain rupees 6 lakhs to be credited to which account? P&L account. Go to the 7th one. One of the very good question. Please read the 7th question. Every word is important. Go through that. What is the annual salary? 14,90,210. The policy is to give a lump sum payment. 25% of last drawn salary means at the time of retirement, what is the salary? அதில் 25% into every years of service of அந்த மாதிரி எடுத்துக்கணும். Salary at the time of retirement into what? 25% into number of years of service அந்த மாதிரி கொடுக்குறாங்க. Salary will grow by how much? 10% per annum. 10% per annum. So first let us work out how much will be paid. This is illustration number 7. What is the present salary? 14,90,000 to 10. You can put plus 10%, work out the amount, plus 10%, work out the amount of the money. Otherwise, 110% into 110% into 110% and the money you can multiply. Why 110%? It grows by how much percentage? 10% each year கொடுத்திருக்காங்க. Multiply. $23,99,999 வருது இல்லையா? So we can round out to 24 lakhs. Are you getting? Approximately you will get how much? 24 lakhs. That will be this is the salary at the time of which one? Retirement, that is after 5 years. So the retirement benefit will be 24 lakh salary into எவ்வளவு percentage? 25% for every completed years of service, 5 years. So how much it will be? 24 lakhs into 25% into 5 completed years of service. 30 lakhs. So annual amortization or annual provision will be 30 lakhs divided by எவ்வளவு years? 5 years. எவ்வளவு இருக்கும்? 6 lakhs. Take up this, then we'll proceed. It's a defined contribution plan or defined benefit plan. Anything that depends on contingent factors, okay, that is called as which one? Defined benefit plans. What is the PV factor given? 8%. So PV factor at 8%. எவ்வளவு கொடுத்திருக்காங்க? 0.735. This is for 4 years. Then 0.794. This is for 3 years. நார்மலா PV கம்மி தானே ஆகணும். Increase ஆகுதுன்னு அர்த்தம். This is for the 4th year. This is for which year? 3rd year. What is the next one? 0.857. This is for 2 years more. 2 years more அந்த மாதிரி. Then 0.926. This is for 1 year. This is 1 for 0.0. 0.0 means 5th year old. At the beginning of the 5th year. So multiply. This is called as current service cost. So 6 lakhs into 0.735. Do you remember plan obligation at the beginning of the year? Formula கூட போட்டிருப்போம். Plan obligation at the beginning of the year. Next என்ன பண்ணிருப்போம்? Add current service cost. Add which one? Interest less benefits paid will give us what? Liability at the end of the year. Yeah, benefits are not paid each year. Benefits are paid only after what? 5 years. This is a table format so that you will understand in a better way. We are working out for plan assets or plan liabilities. Plan liabilities. I'll explain and work out. Just take up this. இது தேவையில்லை. This already we have taken in a tabular format. Let me to do it here. Plan liabilities at the beginning of the period. Plan liabilities at the beginning of the period. Then interest cost, then current service cost, then plan liabilities at the end of the period. You will understand how this works. First year, what is a plan liability at the beginning? 0 இருந்திருக்கும். Interest cost அதனால என்ன இருக்கும்? 0. Current service cost for the first year எவ்வளவு போட்டிருக்கும்? 4,41,000. So plan liabilities at the end of the year is nothing but current service cost. Wait. Second year plan liability is nothing but last year oda closing balance. Interest cost will be எவ்வளவு percentage interest சொல்லிருக்காங்க? 8% interest. So current service cost எவ்வளவு இருக்குங்க? 4,76,400 போட்டுருக்கோம் பாருங்க. 4,76,400. Plan liabilities at the end of the year will be opening balance plus which one? Interest plus which one? Current service cost. Third year la பாருங்க. Plan liability will be last year's closing balance. Interest will be on this 8%. On this எவ்வளவு percentage? 8%. Current service cost work out பண்ணிருக்கோம். What is the current service cost? 5,14,200. Then this will be the closing balance. Opening balance plus interest plus current service cost will give us which balance? Closing balance. Then fourth year போகும்போது, okay, what is the opening balance? This opening balance 15,43,094. அதில் interest cost எவ்வளவுங்க? 8%. Current service cost work out பண்ணிருக்கோம். எவ்வளவு work out பண்ணிருக்கீங்க? 5,55,600. Closing balance will be 22 lakhs, something like that. Fifth year the benefits are payable. So what is the plan liability at the beginning of the year? 22,22,142 வரும். Interest work out பண்ணுங்க. Then current service cost போட்டிருக்க எவ்வளோ? 6 lakhs. இதை add பண்ணீங்கன்னா you will get 29,99,913 வரும். But round off பண்ணிருக்கோம் நாம. எவ்வளோ round off பண்ணிருக்கீங்க? 30 lakhs. This you take it as a balancing figure. 30 lakhs minus என்னது? 6 lakhs minus this amount. You take it as which one? Interest. Last year alone, because to avoid the fractional or to avoid the difference, we take it as what? The balancing figure. And PV factor, the 0.735, 0.794, is it actually that one or we round off? Round off. Adanale, and the difference will come. 10, 20 rupees, 100 rupees difference will come. 30 lakhs minus 6 lakhs minus 6 lakhs minus 22142. That will be the interest cost for the last year. That will be the interest cost for the last year. So plan liabilities at the end of the year will be how much? Fifth year will be how much? 30 lakhs. And the 30 lakhs தான் நம்ம obligation pay பண்ண போறோம். Retirement benefit 30 lakhs pay பண்ண போறோம். Take it. So interest cost is 8% on the opening balance. It's a balancing for. Why are we taking balancing for? Just to avoid the rounding off or fractional errors. over so planned liabilities at the end of the year will be recognized in balance sheet. Every year this will be the liability you will show us which one? Retirement benefit plan solid. Interest cost and current service cost every year totally you will recognize in P&L account. The current service cost, interest cost you will recognize in which account? P&L account. Suppose during first year, second year, third year, if there is any benefit paid, என்ன பண்ணிருப்பீங்க? Planned liabilities at the beginning of the year, interest cost, current service cost, less benefits paid would have given what? Planned liability at the end of the year. Shall we? Orangal adu. We will do one more question. That is question number 16. What is the journal entry for issue of shares? Sir, what is the entry will pass? When you collect money one shot, what is the entry will pass? Bank account data to which account? Equity share capital. Suppose if you issue for more than the face value, it will be called as what? Securities premium. Okay, pay attention. Let's assume fair market value of the share rupees 300, face value is rupees 10. Face value is rupees 10. To the employees, shares are offered at rupees 180. Shares are offered at rupees 180. There are 10,000 employees. 1,000 employees. And each are offered 10 shares. How will it treat in accounts? Is there an employee benefit here? Yes. What is the fair market value? Employees are given at, so that will be called as employee benefit expenses. So the accounting standard says, if you give the shares to the employees at a concessional rate, the concession the employee is enjoying, that is a benefit for them. For the company, it is a cost that should be recognized. That should be recognized. Maybe tax la paathirupeenga. perquisite. If employees are getting the shares at a less than the fair market value, the difference between fair market value and which one? The excise price will be taken as what? Perquisite and taxable. And perquisite and which one? Taxable. Capital gain, you would have seen the fair market value will be taken as what? Cost of acquisition, since the difference is already taxed in Patrupin. Okay. Patrupanu. Now, let us take this as an example and solve this question. Then we can go to that book question. So bank account debtor will be how much the employees will pay. 1000 into 10 shares into 180. 1000 into 10 shares into 180. How much the employees will pay? 18 lakhs. Employee benefit expenses account debtor. Employee benefit expense account debtor will be how much? 1000 shares into 10 into the difference between fair market value and ESOP price. That difference will be taken as employee benefit expenses. Then equity share capital will be face value. What is the face value of shares? 1000 into 10 into rupees 10. 1 lakh. Balance will go to securities premium. 18 lakhs plus 12 lakhs minus the face value will be recognized as which one? Securities premium. Take up this. In this question, is it a short-term benefit or long-term benefit? Employees are short-term benefit. Shares are announced and exercised in the same financial year. If announce பண்றோம் நீங்க ஷேர் வேணா பர்ச்சேஸ் பண்ணிக்கலாம். அது அவங்க வச்சுக்கலாம். நீங்க ஷேர் ஹோல்டர்ஸ் எம்ப்ளாயிஸ் they hold for short term or long term அது அவங்களோட பிரச்சனை. Company's point of view, it is announced and exercised in the same year. This will be an employee benefit expense charged in which account? P&L account. For the employee, if you hold it for less than 12 months, more than 12 months, and the STCG, LTC, for the company's point of view, benefit is given. That will be recognized as an expense in the P&L. It is an example of which one? Short-term employee benefit. Otherwise, there is no condition for this. Now read question number 16. This employee benefit expenses will be recognized in which account? P&L account. Simple. Whatever the company loses becomes cost to the company. Charge it in P&L. Read question number 16 next. Question number 16 பாருங்க. How many shares are offered? Face value is 10. 10,000 employees at what? 40. When the market price is 130, only how many employees opted? 9,500 employees opted. So the journal entry will be based on 9,500 employees. 9,500 employees into how much they will pay. Number of shares கொடுக்கல. So per employee we assumed 1 shares. 9,500 into 40. Then difference 9,500 into what is the fair market value? 130 minus 40 will be taken as an employee benefit expense. Then equity share capital will be 9,500 into 10, 95,000. Balance will go to securities. At the intermediate level, the knowledge is required is only this much. But sometimes employees will be given with a vesting condition. What do you mean by vesting condition? You have to work for 3 years to get the shares and only. Option will be announced now, but it is exercisable after 3 years now. Then this employee benefit expense will be recognized over how many years period? 3 years period. 8,55,000 divided by 3. So recognize expense every year. Then third year when options are exercised, you have to pass the entry. Okay, that will be covered at your final level as Ind AS 102 employee benefits and solely. Okay, or accounting for share-based payments. That is called as which one? Accounting for which one? Share-based payment. How to do accounting for this ESOP with vesting period, with other conditions, etc. and all. You will learn at the final level only. At the inter level, this knowledge is more than sufficient. The employee benefit expense will be recognized in which account? P&L account. Sometimes in the exam, if they give you the options are exercisable after 3 years, the same expense you will write off over a period of how many years? 3 years. So with this, what is over? AS 15 is over. I request you to go through your material also. Same problems will be there, but certain additional multiple choice questions with answers. Then certain practical questions will be there with different numbers. Same thing. All the first 15 questions with different numbers or concepts will be there. You can go through.